All righty, you guys are stuck with me for 10 more minutes. 8 more minutes. Woohoo. They're like, no, I'm not. Turning you off. But anyways, before break, Sheila and I had some good conversation here. Just a general statement, right? This isn't exact, but just estimates for you. What can you get? If I can afford $2,500 a month on paper, what can I buy, Sheila?
That is a really good question, JT.
Again, right, because this is important, it's the interest rate and the purchase price that affects what you can afford, right?
Right.
So with the current interest rate, $2,500 a month, what is your best guesstimate that I could afford?
You could now. I'm going to give you a number. So it's about 300,000 ish. Could be a little less. Could be a little more, and it's going to depend on your taxes, your homeowner association fee, and your mortgage insurance. If you're a veteran, you might be able to qualify for a little more because VA loans do not have mortgage insurance. Right. So that's a big deal. So those factors. So with that said, about $300,000 purchase price, again, plus or minus, because when you're looking at $300,000, you're more than likely going to purchase a townhome or a condo, right. And they have HOAs.
Higher HOAs typically.
Yeah, so that all goes into it. Which is
another discussion to be had in itself, right? Like the debate between buying, the most affordable single-family home or a, good condo/townhome is like,
right.
What is the point of even buying a townhome anymore? Because you're still spending, and I think Bob mentioned this was great comment, or a great point here. These condos, townhomes now are like 75% of the value of a single family. Just buckle it up and buy the single family at this point, because the HOA on the townhome community is going to be $350 or $300, right? Because these townhome communities are outrageous, right, for their HOAs.
And then plus your appreciation is more in a townhouse because you own the land.
Oh, you actually own some land, right?
Yeah.
You're not owning just airspace with the condo.
Yeah, condo's like buying an apartment.
Right. So. Yeah, you're basically buying
air
the inside of the walls, right?
Exactly. So, but that's a good start too. So
it's just the point of that, because of how much appreciation or maybe how much the costs have increased to buy condo townhomes now, it almost makes more sense to buy single family, right? Even though you might be paying $100,000 more on purchase price, that might come down to like $100 on payment at the end of the day after HOA differences and whatever other differences there are, right? It might not be that small, but kind of, I hope you get the point I'm trying to make. It's just way too close than it used to be.
Yeah.
To make sense, right?
No, it is.
And to give you guys, like, I don't mind sharing this as well, just to give you guys some accurate estimates on itself, right? Like, for example, a $380,000 loan in June for, no, you don't have to look this up. This is my loan I'm talking about. I'm thinking about it here. 7.625, I believe was my interest rate. 7.625. Mm-hmm. If you need to hear that again, 7.625. So you could get a 1 point lower rate today.
Yeah.
Than I have currently. And I'm a real estate broker. Yeah. And I have no problem with it.
Yeah, Jacob, why aren't we refinancing
it? Actually, wait, I do have a problem with it. I hate it. But I mean, I had no problem making the decision to pull the trigger and move forward. Right?
Because?
Other than getting past my fear.
You needed to get into a house.
Right,
Yeah.
I have a baby.
Yeah.
I needed it. It wasn't a question of if or, should I. It was like, when am I getting in?
Mm-hmm. And if you would have waited, your house would be...
Oh, yeah, 100%. It would definitely be another $20,000, $30,000 already, right? It got appraised at $412,000. I already, based on the little appreciation I probably gave it from the, forced depreciation of the remodel, and then the actual appreciation of the neighborhood, even my little, I forget who my servicer is already. I don't know, I have it all auto, but even whoever my servicer is already has my automated value at $460,000.
Mm-hmm. That's big. That's huge.
I'm like, that's 6 months. Obviously, I haven't even looked at the exact details, but my whole point of this was the payment for that. If you could guess now, and I'll tell you here in 2 seconds.
Yeah.
36.45.
Yeah,
right?
with about taxes, insurance, and everything.
About $3,650 a month for a $380,000 loan, right? Mm-hmm. And that is 100% affected by that interest rate, right? That same loan you know, with a 5.625, that payment's probably under $3,000. It's probably $2,500 maybe.
Yeah.
Right? You're really affecting your payment monthly when that rate changes, and that's why it has such an effect on the market, right? But what people also need to understand, you consumers out there, right, is by the time the rates are dropping, like, you're almost too late to maximize your value, right? You're never too late in real estate, ever. Right? You just buy and hold. Right. You're never too late. Just keep buying and holding. You're fine. But, I mean, if you're 67 years old, maybe you're not going to want to buy a home and wait 20, 30 years to make some money, right? But I don't even know where I was going. I just looked at it. I just lost my train of thought.
Payments, interest rates, comparison of
right. I was stressing on how important it is, right? How much these interest rates really affect these purchase prices, right? And that people get so caught up on the purchase price number when it doesn't matter at the end of the day. Your payment is what matters for you and for your situation, right? Down the road, the price might matter. But
so
really buckle down that payment.
Right.
And how you do that goes back to what I started talking about when we first started the show. Is you consumers out there need to get with lenders. So lenders, I challenge you to get in front of consumers first, please. It's easy for consumers to go to a realtor and start getting excited, and for us to get them excited and to get everything hyped up and like, let's go look at homes. And then we're in this situation where we have a pool of consumers that isn't as educated as they should be before they're making these financial decisions.
Right.
At the bottom line, that's it.
Yeah.
These consumers need to be more educated on their decisions they're making before they make them.
Yeah.
Bottom line. If you want that education before you make these life-changing decisions and these financial decisions, give the real estate guys and the lending lady a call. And we're going to make sure we provide you with ample education and as much information as possible and allow you to feel content with making a decision and, good about it, right? Whether there's a little doubt or not, you'll know you've made a good decision based on the information we provided and helped guide you.
Yeah. Part of the service, what we do also is we put a strike rate. So when we sit down with you, we agree on, so Jacob's example, the 7 point something, well, typically it's a point, depending on your principal balance, it's a point or more you want to refinance. Right. Don't get greedy and say, I want to wait till the rates get to 5. Don't do that because they may never happen and you might lose out at that 6.25 or whatever. So it's important to take it while you can in increments.
Right. No, maybe I do need to revisit it very soon. But I believe I needed 8 payments first too, right?
Yes.
Yes. So I'm not there. Okay. I'm not there yet, I think. Or am I?
I think you're there. I think you've been in your house.
Well, does the first payment that goes through escrow counts, right?
Yes.
Okay,
first
so
payment.
that would be June.
So you skip a payment when you close, and then the first payment. Yeah.
Okay,
yeah,
so I think I'm at my 8th month, basically.
Okay.
All right.
So we need
so I can refi.
Yeah,
so
let's do it.
That'll definitely be done here in the next few months. But I was really hoping to see low 6s, but I'm conventional, so I might still be mid 6s, right?
Yeah.
Yeah, so I still need a little bit longer.
Yeah, right.
But anyways, the point I shared that all with you guys is that, I don't just talk it, I walk it. I'm doing it myself. I wouldn't do it if I didn't believe in it. So anyways, thanks for tuning in. We really appreciate you guys.
Yes, we do.
This is our family. This is our livelihood. So thank you so much. We appreciate you. Take care, Las Vegas. Have a great day. We'll see you next week. And thanks for joining us, Sheila.
You're welcome. Bye-bye.